Hi friends, in the last video we were discussing about the objects of auditing. As I told, there are primary objective, secondary objective and some other objectives for doing auditing. And the primary objective was to verify the books of accounts and to see whether the balance sheet and profit and loss account of a particular business organization is showing true and fair statement. And the secondary objective was the detection and prevention of errors. And we were discussing about this in the last video. And detection and prevention of errors include error of omission, error of commission, clerical error, principal error of principal, and also compensating error. And this video we are going to see about detection and prevention of frauds. So detection and prevention of fraud, as you all know about, you all heard about the term fraud. Okay, so that fraud means it is a false representation or making a wrong entry intentionally to defraud somebody. So the result is that some loss or liability is caused to the proprietor of the business. So as you all know, fraud means it is a false representation or misrepresentation or making a wrong entry intentionally. Okay, if they are doing some mistakes intentionally in order to defraud someone else, mainly the proprietor of the business organization, then we can say it is a fraud. So some fraud is being happening. So the result of the fraud will be that there will be some loss, some amount loss, or any liability will be occurring for a particular business organization. So let us see what are the different types of frauds. So, fraud that can be classified into misappropriation of cash, misappropriation of goods, or fraudulent manipulation of accounts. So, fraud is happening in those three ways. First one is misappropriation of cash, misappropriation of goods, and also misappropriation or fraudulent manipulation of accounts. So, misappropriation of cash means that can be done by the employees of a particular business organization. Misappropriation of cash include suppression or non-disclosure of cash receipt. Sometimes, in order to create fraud or in order to defraud the businessman or a business owner of a particular organization, the employee may suppress the cash receipt, or he may not disclose the cash receipt, or he may not enter a particular transaction in the books of account. So this type of fraud, we can say that it is a fraud made in the form fraud that is being done in form of cash. Okay, so misappropriation of cash that can be done by employees, it is suppression or non-disclosure of cash receipt. And the next one is and also misappropriation of cash is also occurring by inflating the payment, or also and also by entering fictitious payment. Sometimes they will be showing in order to reveal that a particular business organization is going well, or it is having sufficient profit, they may be inflating the payment. Sometimes if a transaction is done for 5 lakhs, they may be inflating the payment as 50 lakh or something like that. And sometimes they will also be entering fictitious payment. Yes, a particular transaction, cash transaction may not be occurring in the business organization, but they will be entering a fictitious transaction as if a transaction is being occurred in a particular organization. So these are some of the manipulation or misappropriation that is done in cash by employees. And also there will be misappropriation of goods. Misappropriation of goods will be done in the form of recording sales larger quantities than actual, or recording purchase of larger quantities than actual. Okay, so misappropriation of goods is done in two ways. First is recording sale transaction in larger quantities than actual. Sometimes they may be purchasing only 5 ton, and they will be recording it as 50 ton or something like that. And also recording purchase of larger quantities than actual. Okay, so so there will be that is we have already discussed. They will be purchasing only 50 ton, and they will be recording it as 500 ton or something like that. And sometimes they will be selling only 50 ton, and they will be recording as 500 ton is been sold. So this is the way in which misappropriation of good is being taken place in the organization. And misappropriation of cash and misappropriation of goods are done by employees of the business organization. And next one is fraudulent manipulation of accounts. Okay, so fraudulent manipulation of accounts is shown in two ways, that is showing more profit and also showing less profit. So in order to attract more investors to a particular business organization, or in order to have a book building effect, they will be showing more profits in their books of account than actual. Okay, so that is a kind of manipulation of account. And another one is showing less profit. Sometimes in order to escape from the tax, or in order to give less pay less amount as tax or something like that, they will be showing less profit in the book of accounts. So these two activities, showing more profits and also showing less profit, that is doing manipulation in the books of account, these activities are done by the top management of a particular business organization. So that's all about detection and prevention of fraud. As I told you, fraud may be occurring in three ways, that is in misappropriation of cash and in the form of misappropriation of goods, and also fraudulent manipulation in the books of accounts. So misappropriation of cash is taken place by suppression or non-disclosure of cash receipt, or by showing inflating payment, or showing more payments, and also by entering fictitious payments. That is, and a particular transaction may not be occurring, but they will be entering the books of account as if the transaction has occurred. And next is misappropriation of goods. Misappropriation of goods include recording sales larger quantities than actual, and also recording purchase larger quantities than actual. So these two process, that is misappropriation of cash and misappropriation of goods, are done by the employees of a particular business organization. And the third one is manipulation of accounts, fraudulent manipulation of accounts. Fraudulent manipulation of accounts is done by showing more profits and also by showing less profits. So these two activities are done by the top level management in a business organization. So thank you for listening to me. Bye.